Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 27th of August, 2018, getting on after 4:05 p.m. Central Daylight Time. All right, today's a big day. We had announcement that the U.S. and Mexico are reached an agreement. It has to go through the vetting process, of course, but they're there. They also made a statement, they being Mexico, that if for any reason Canada can't agree with the U.S. and make it a trilateral agreement, they're still going to go on it on a bilateral agreement. That's very good. Then for the agriculture markets, the USDA came out and announced their farm program to help farmers that have been hurt by all these trade wars. The highlights you have to have made over the past, from what I understand, since 2014, $900,000 a year or less. That'll apply to a corporation and an individual. It's going to break different amounts down. It does not come out to the 7-point-some-odd billion we thought, even though it's a $12 billion program. They're only using 4-point-something billion, a small amount of the program. If you're a soybean farmer, you're going to get $1.65 a bushel of half the size of your crop, and it's going to be capped at $125,000 in help. And they go on and so forth. I've put it all in my nightly report tonight, giving you the exact way that it works, so look forward to receiving that if you're a subscriber to my information. So the dollar fell today on that news. That did not do anything for the beans. They're still down today again, even after all this, 7 1/4. The market bounced away from the lows of the day about 10 cents, but you're still in a down thrust. And as you can see on the daily bar chart, the market continues to drop away. Now it seems to be targeting this 826 area that we had a double bottom at recently. When we look at the pattern is one where you've gone straight down from 907 now to 848 1/4. Actually, the low today was 838 1/4. So this market has dropped in round figures 70 cents and just done it with day after day of lower lows in the market. The crop condition reports came out very favorable in the afternoon, so don't look for any help from that. As you look at the moving averages, the battle was fought at the 18-day average on a bounce from the prior lows and fell. You sort of did that here, but then you managed to move higher. This time you had a big failure in this 907 area, and the market's still working lower and riding. Now, I want to use the current phrase, current. Riding the lower Bollinger Band to lower numbers, not bouncing away from it. That's a bearish sign. And you also are oversold, which is the part of the market that you can hang a hat on and hope that the market turns away from it. Got it? But you're in a market that's got downside bias, the momentum's down but oversold, and you're riding the lower Bollinger Band, not bouncing away from it, and meal has turned very bearish. Lower highs, lower lows have been in place. This is that riding of the lower Bollinger Band as well. Now, if we take a look at Friday's action, on Friday you finished 316.30 under the lower Bollinger Band. The day before, under the band. That was 2 of the days, not here. So we have 1 day under, being last Thursday, Friday, and today. That's 3 days in a row. When I look at Bollinger Bands, I count each successive close under a Bollinger Band or over it is 1 of the percentage points against the 5% rule. 5% of the time the market will close over or above a Bollinger Band. But when it rides it like this, the bounces you get are typically markets that are just bounces, not trend changes. Be careful there. As we take a look at soybean oil, it had an outside day up. The market is caught in this narrow sideways band. Look at the difference of meal, how it broke out to the downside. Soybeans trying to do that, and now go to the soybean oil just staying within the band. It's the opposite end of the crush spread, and it's the market getting a small bid. In the corn market, the news today, not very helpful. You're still riding that lower band. You did close over the low. You're oversold. If you took out 364, you would break the pattern of lower highs, lower lows. So the market at this point is completely in a downtrend, oversold. In the wheat, we're watching a collapse in U.S. wheat prices. You would think with the break today in the U.S. dollar, you'd get a little support. That didn't come in. And now what you've got to be careful of is how many days under the Bollinger Bands do you have? Today, certainly. Day before, yes. Day before. So when you do that, you have 3 days in a row. That means you've switched from being oversold to embedded. Embedded means you're not oversold anymore. You've locked in a bear trend until the red line closes back over the 20 reading. In the sugar market, you had lost this bearish reading. And when you do, like I'd expect in wheat when it eventually happens, it often triggers a rally back to the closest main moving average. In this case, it was the 18, and that's what the market has done. In the coffee market, when we lost the embedded reading, and this happened actually on Thursday, confirmed on Friday. Well, this morning I had gone to my subscribers with the morning video, and I said, look for prices to get up near that 18-day average. You didn't quite hit it. You got 14 points away from it, but wouldn't surprise me if you do hit it. In the cocoa market, we have a reversal down day, but the market still has the pattern of higher lows, higher highs. Very overbought. Was riding and had 1, 2, 3 days in a row over the Bollinger Band. So pulling back to the right-hand side is fine, but it's no trend change. Not at all. You're overbought. That's the danger, but still in an uptrend. In the cotton market reached down today and came back up. And now the question is, does it have the power to get back up to the resistance at 84.30, 84.41? Unlike soybeans, apparently the farm program, which does include cotton, kicked that market up a little bit. Now, in the meat, you had a bearish cattle on feed report, and you opened lower. That was it. From there, the market just took off with a dramatic price rise. If you look at the range, 109.70 to 106.20, that's 350 points. The market went up, challenged the 18-day average of closes, hit it at 109.70, and backed away a little bit from there. Same thing in the feeders. You literally stopped on that. And that's the theory I have. When a market is down sharply and it rallies, if it gets to the 18-day average, often, I'm not going to use the word always because it's not accurate. Often expect the market to stall there, trying to figure out what it wants to do now that it's reversed itself. The hogs were limit up. Where do we send pork? Mexico. Are they going to open the markets? Well, according to all the reports I had, they're going to open their markets now. We've lost poultry business. We've lost corn business. We've lost, as a country, hog imports. Now let's hope that all those parts go away and we can get back to the point with one of our big trade partners. They're not our biggest. Canada is, folks, even though the president said it differently. It's Canada that's our largest, but Mexico's extremely big and extremely important to us, and we need to prove that we're a good source for their material. So that's what the market did there. We're starting to get new price counts. Now, let me explain what a price count is in case you don't know about it. It's a chart formation that sets itself up on an upside or downside, and from that, let me turn over here so you can see the number if you want to call us or go to our website. And from there, it sets up which way a market might go. As an example, you had a big down, you come up, break, and then you take off. Go to the gold chart. You're going to see a formation just like this. Doesn't mean the market has to go up. It doesn't. It's an idea of where the market's going if it breaks or rallies. You're in price counts in all the grains. You want to understand where they're at because you get to a certain number where the probability of continuing in that direction starts to dwindle. How do you find out? How do you get our chart of the day? Call us. Go to our website. You can click up here to get this as well. It's all sent out by email every day. Today we did one on the Mexican peso, so it varies on market to market. I'm Ira Epstein. Talk to you tomorrow.